this is a time to take a little bit off the table, right? So what you can see is, again, you got down, even though down here it was as low as about just below 900. So you have to look at it. And one of the things as a trader, I make sure to mark myself, it's not what your entry is, it's what the low was. So, your entry might have been 1400, but if it went to 900 or 885, it's now up 100% off of those lows. And you have to say that's a big run in a very short amount of time. I love the fact that the chart is banging on this resistance. You can see the resistance very easily over here. I love that we hit it here, we consolidated, we hit it here again, and then it looks like we're trying to break out. So taking a little off is a good idea. To me, it still looks like there's a little bit more upside in Ethereum, likely coinciding if we can get to 25.5 or greater on Bitcoin. One of the levels to watch would be 1900. You can see this kind of area right here. And then really, I would even say the even number of 2000 would be your next level. So, let's just say you have a full position on Ethereum. I think you look to take maybe 20% off here, 20% off above 1900, 20% off above 2000, and just kind of cycle out that way. And then maybe just hold your remaining 20 or 40% and just say, I'm going to roll with it just in case we start a new bull market, and then you participate. But we certainly, in all fairness, I'm believing that we're going to start coming into some big resistance and eventually roll over. The last thing I would just note is this would be kind of the most bullish case scenario where I would actually short Ethereum. If Ethereum got a monster move up into this trend line, I would probably pull the trigger on a short in the next couple of weeks. Again, picking tops and bottoms is extremely hard. It's taken me, I've been a trader for 2 decades now, and it certainly didn't come to me in the first decade. It came to me more in the second one. Now, having said that, I do think that the retail crowd can start to at least look for certain signs that make them feel uncomfortable. And just like you dollar cost average in, there's nothing wrong with dollar cost averaging out in a way where you take a little bit off the table. And what I would say to the retail crowd is, look for signs of mass hysteria. And when you see that, when you see everyone, when you go into the bagel store or the pizza place and you got the guy behind the counter telling you it's got in, those are signals that as a trader, you can't get excited by, you actually need to get fearful by. And so again, I'm not saying you necessarily want to say, oh, I'm going to dump my whole position, but what's wrong with taking 25% off when you see those signs and then potentially rebuying at a lower level? So I think dollar cost averaging in is great. And I also think taking a little bit off the table, like I say to all the traders that I trade with, no one went broke taking a profit, right? Worst case, you might not have made as much, but at least you locked some in. Before we started the big run in 2021, in late 2020, in December of 2020, there was a bunch of choppy consolidation around 645. That's kind of what I'm looking at. So again, I'm not sure if we're going to see 300 or 200 or those numbers, but for me, that's where I would start to accumulate on a big drop in Bitcoin. And that kind of makes sense, right? Because if you think about it, it would be about a 50% haircut to get us down in that general 10 to 12 range. And then you think Ethereum would probably do a 66% or so, and that would be right around that $600 level. So for me, I'd start accumulating around 600. And remember, you never want to just say, oh, I'm only going to buy everything at this level, because you never know if it will hit. So put a small amount out here and a little bit lower and a little bit lower, and do that same dollar cost averaging on entries. So short term, I'm going to play the conservative side, and I think Bitcoin is the play here. Ethereum's already over 100% off of its lows, and I think, again, Ethereum has that higher beta where in market bounces, it's going to do more, but then in market bear markets, it's going to lose a lot more as well. And because I still think we have that leg down, I think if you had to choose one, you want Bitcoin, because, again, it has the stability, it has relative stability to Ethereum. Now, longer term, that's the better question, right? I think that, again, you'd probably want some exposure in both. So you cover both bases. You have the use case of Ethereum and the Ethereum network, and then kind of the digital gold, where a lot of institutional money will flow into the Bitcoin investment. So I think in longer term, I like both of them. I think I would generally say to people to be careful with other cryptocurrencies, because we see, if you look back 2 years ago, a lot of the ones that were in the top 20 are no longer in the top 20.